Night, Kalilah.
So tonight you are telling us about GK. Their third quarter results are out, and there are some interesting developments, including Don Webby now being the 10th largest shareholder. And what else? A big dividend payments coming up. So tell us more, David.
So basically, we would have heard in the last month or so that, Don Webby, would have taken a leave of absence from GK, to take care of himself. But in the subsequent weeks after that announcement, we got the third quarter release for Grace Kennedy. And because the company is required to disclose its shareholder listings, we learned that, Don Webby has been elevated in a sense to become GK's 10th largest shareholder with about 14.57 million shares. Why does that matter? To put into perspective, Don Webby was working at GK going back to, I believe, the 1990s or probably or 1989 around that period. But for someone like Don Webby to have been, spending so long at GK, ascend to the CEO level, and to become an owner of that caliber, it speaks volumes. Because Douglas Arain, who was GK's previous CEO, he's GK's seventh largest shareholder with 20.56 million shares. So it's to kind of show you that basically some persons, might stick with one job, which, something that is not typical of nowadays, but, typical in our current generation. But for some persons, it was how they built their wealth. And in this case, it's paid off handsomely for Dan Webby because the largest shareholder shares worth over $1 billion. And just, based off of the amount of shares he has alone, he is looking at, let me look at your dividend was, I didn't remember it immediately, but yeah, 0.75 cents. So at least $10 million to Dan Webby before taxes and dividends. And
So are shares a part of his compensation package?
likely, GK issues new shares through stock options. So you get the option to purchase shares at a discounted price. GK doesn't disclose, that, information like in the USA, you would have to see that, but it's more than likely. So in the JSE disclosures, you tend to see this there's excess stock options, and that's why they got their shares. So more likely there's competition as well. And just continuing that same breath, GK are, in the same breath, in announcing their third quarter results, announced their largest ever individual dividend payment. Not special, just regular interim dividend payment of 75 cents, $743 million, to be paid December 16, apologies. But that's, quite telling because when I heard investors on the JSC, GK was paying dividends 3 times a year. Then they moved to quarterly, I think either 2019, 2020. And now, apart from increasing dividends earlier this year, they have paid dividends so large that, it's pushed their total payments for this year alone to $2.3 billion. So it's all good looks around. And going back to GK's numbers, for the third quarter, revenue was up 6%, $40.22 billion. Well, that's what regular group console, but total revenues including interest income is $42.42 billion. Net profit was up 22%, constant net profit to
That's
$2.35
what I
billion.
was about to ask. I'm wondering, so with this big dividend, does it mean that profit is up substantially? 22% is pretty strong.
It is to $2.35 billion, and 700 million is about relatively 1/3 of the total profits. So can't complain, and that's with respect even to the net profit attributable to shareholders, which is the actual dividend that is shareholders actually will own profitability. So it's a good look all around, and GK total assets as well have gone up by an additional 6%, $234 billion. And in the midst of all of this, GK is still buying back their shares with a level of veracity, I should say, velocity.
Velocity, yeah.
That I still can't believe. So on November 8th, GK would have purchased 1.15 million of their shares under their current buyback scheme. And that would have come down, that would have come up to $84.84 million in value just purchased on one day under their current share buyback program. And based on their 9 months, they've spent about probably $270 million up to the end of September on their buyback program, and they're currently at 6.41 million in terms of the number of shares they purchased so far. So they're at 64%, got it almost 2/3 way through in their share buyback program. It's supposed to end at the end of this November. We're not sure if it's going to be extended, but it's a pretty good buyback program in terms of execution. We would have seen other announcements of other buyback programs on the JSC, but they weren't necessarily sustained to an extent. And even then, you've heard of recent new announcements, but no buybacks as yet. So we would have heard of JMB buyback, when about 50,000 shares so far. You'd have heard of Capers announcing back a dividend buyback again, but haven't actually did it this year at all.
What was the reason for the buyback? Was this the stock performing poorly?
No, well, poorly is relative, because if you're buying back shares, if you're buying shares through options at a discount, you're quite well. But their perspective or their comment at the time when they initiated the new buyback program was that they believe GK's share price was trading below its intrinsic value. Now, I don't know what value they determined that to be internally, but for relatively speaking sake, I believe GK's book value is around $69, $70. So if you remember the circa $70, 74, I should say, then you're getting a relatively good deal. And this is against the backdrop of GK, having this big runway or pathway, to get their revenues to at least $2 billion US by 2030, getting 70% of the revenue and profits outside of Jamaica. So when you tell the buyback now, it's relatively accretive to shareholders, because these are shares that are being purchased by the company, from its cash flow, reducing the number of shares outstanding. And in turn, because they bought back these shares, it has, as a result, it has in turn, resulted in there being less shares over circulation. So when the dividend increased, if the dividend was to stay the same for GK, let us say they paid the same dividend as last year, more cash would have been paid out overall, because there are less shares to pay against because of the buyback. So that's the positive of a share buyback, basically, in the sense that if the company is purchasing the shares below book value very cheaply, then as a result, future dividends are going to actually increase on a nominal basis, just because there are fewer shares to
For
actually
the
pay on.
NCB sponsored Morris.
Sorry. Didn't intend to do that. Go ahead, Sashel, please put David back on the screen.
I love taking stock. Something different every time. But yeah, GK is doing pretty well, in all honesty. Food trading, which is the established GK brand, still pretty up strong year to date. We're also seeing a continued improvement in banking and insurance, but money services challenge in the current environment. And just what is money services? So your Western Union, GK is the exclusive Western Union provider in Jamaica. You want to buy FX or sell FX, that's FX trader. You want to pay a bill with a utility provider or just a provider, that's where you have Bill Express. And GK's money services business is not only isolated towards Jamaica. They're also operating in Trinidad and Tobago, along the Eastern Caribbean, Guyana. So they've been challenged recently this year because Jamaica is the largest market. Remittances are relatively down year to date. And on top of that, the FX rate has depreciated year to date as well. So there's likely a tightening in that spread that they would earn on those FX remittances coming into their coffers. So for the most part, I like what I see within the GK. They had the announcement with NCB and Link earlier this year. They're still doing those acquisitions. They bought that 20% stake in Spur Tree. Still have a very active M&A unit. So let us see how things pan out in the coming months, and let us hope that former Senator Don will be recovers and is able to return to his substantive role as CEO of GK.
So what was driving the growth in profits for GK?
Food trading. So
Food trading. So their core business.
bingo. So let's put it in perspective. So food trading, your canned foods in the supermarket, the Catherine's Peak bottled water. They own the A76 Spring brand of water. They distribute goods under World Brands and under the distribution portfolio. And I believe I can't remember which segment they also the manufacturing. They also have Lafayette in the USA. They have Funny Bones in the UK. So their core business, which they've been continuing to expand upon over the last couple of years, is continuing to take new heights in growing GK's bottom line. So while in the past food trading would have been the second largest contributor to its profitability post pandemic, that is the new king ahead of money services. So it's usually food trading, money services, bank insurance, and then bank and investment. Bank and investment tends to always underperform in tougher economic environments like what we've seen in the last 2 years with higher rates.
Okay. Well, thanks so much for the update, David. Wow. I want to have money talk like Don Webby. Rich
My
people
only last
business.
my only comment with Trinidad is that something is going to break in the economy at this point because the reality is your business cannot be starved that much in terms of seeking FX and still function unless your country is a China where it is effectively self-sufficient and can close itself off the rest of the world. Something has to be radically take place over the next year because it's the breaking point.
I
Because remember,
remember we were there. We were there in the 2010s. I remember this entire conversation in Jamaica just a few years ago.
it's in 12 days, Kalilah, you cannot use your Scotiabank debit card if you're a Trinidad and Tobago client overseas at this point.
You can't
Like,
use it overseas. But to me, the worst part is you can't get your own money. So you're earning US dollars, you go to the bank and ask for your money, and they tell you, no, you can't have it.
trust me, Kalilah, it's madness. As I said, something is going to break because the more constraints you see in the economy, you're going to just see more, not necessarily crime, but you're just going to see more economic contraction as well. Okay, you're going to have much FDI, foreign
There's
direct
economic
investment.
contraction, and then what Marla was talking about, Trini is going to the black market. Ask yourself, what is the black market? Where does the money on the black market come from? A lot of it comes from illegal sources.
People have to pay their bills, Kalilah. People have to pay their staff. You have to operate. And the reality is, if you're given a particular ration every couple of days or every couple of months as a business, how are you going to function?
They are
So
going to run
it's
into compliance issues with blacklisting, where Jamaica is just emerging from AML, CFT compliance issues. It's going to become a big problem for them.
and this is kind of where I've told people that as Trinidadians they have to come up with more innovative solutions. So for example, cross transfers. So somebody that wants to get some JMD, you want to get some TTD in Trinidad. The person in Trinidad sends TTD to your TTD account in Trinidad, and then you send JMD from your Jamaican dollar account here in Jamaica to their JMD account as well. So there's no wire transfer. Both of you, agree on a rate, and you can do what you need to do afterwards. And you remember that persons would have used the JSC because we have companies like JMMB, GK, uh, NCB, EPLE, MPC that are cross-listed. Persons buy on the TTSC those shares, do an inter-CSC transfer, sell it on the JSC at a potential loss, and then converting it to USD to then send back to Trinidad. So it's an unfortunate situation, but something's going to break because I don't think people have enough, firepower or volumes left in Trinidad to be shipping shares to Jamaica to get FX,
Mm-hmm.
especially at a loss.
No, but I'm telling you, this situation is the perfect storm. It creates a perfect opportunity for people like drug traffickers to launder their money. So
But at the
they're earning, you get the USD, they need somebody to sell it to wash that money. And you have business people over here who can't get US, they're going to buy it from whoever has it available.
Which is, here's the funny thing with Kalilah, it also creates a business opportunity because you see a lot of Jamaican companies actually going more towards Trinidad because what? Trinidad is still a relatively large economy, and if depreciation was to take place, the businesses are still selling their goods overseas in USD. Remember, Trinidad is a manufacturing mecca of the Caribbean. So, anyway, look at it. Some businesses are still technically, thriving, and Jamaican leaders are saying, hey, these potential Trinidad business, owners want to sell, get some USD, by having them at a discount,
You heard
and
what
just
Marla said? Mm-hmm.
figure it out because when NCB Financial Group, for example, bought Garden in 2019 or acquired the majority interest, they had a one-time gain of about probably $9-10 billion one time, just off of that, acquisition. So that's to show you that business persons who are looking on are going to be taking advantage of this crisis in Trinidad.
As they should. Well, we're going to leave it there for today. David, thanks again for your input as usual. All reliable every single week. David Rose